Here's a big question. Has momentum run out of the historic bounce from the April lows? Let's ask one of this country's top financial advisors. He's Rich Saperstein, Treasury Partners CIO, and he is right there live at post 9. Do we still have momentum left, or are we tired?
We do. The backdrop is very favorable. We've got full employment, a Fed on hold. Tax policy has been resolved. We're going to get the benefits of deregulation. And the overall economy is still growing. So I think the overall environment for owning stocks is favorable.
Tailwinds galore. That's what you see?
Yeah. Primarily in the tariffs. So the tariffs were headwinds. And I've been pretty vocal about how it's a self-inflicted wound and it'll change and turn into a tailwind. Now they're turning into tailwinds.
How does it turn into a tailwind if it's still a quote-unquote tax, even if it's 15%? Somebody's paying that.
I think the economy
doesn't just disappear.
The economy, two things. The economy has been very resilient to many shocks, and it will be resilient to tariffs. But if you find the right sectors that are not as affected by tariffs, that's where you want to be.
Like
large cap tech, utilities, banks, finance. So if you want to buy consumer products or cars or something that is going to be tariffed, then you're stepping in the way of that. So I prefer to be outside of that and find sectors that are benefiting just from the growth in the economy.
Okay, so you're telling me I just want to stay with what's been working really well. But financials have been at an all-time high. Mega cap has led the market. Mm-hmm. Power and the electrification of AI.
Yep.
Just stay with what's worked. Then you're not a believer in the broadening trade.
No, I think that one of the things I learned 40 years ago.
Plus.
Okay. One of the things I've learned is you don't sell a top, or you don't sell something that keeps moving higher, and you don't try to buy a bottom, right? So I don't see where it might broaden out, but I don't see where I should lift our concentrations from sectors that have tremendous opportunity now. And those are the three you just mentioned.
And you think this week when we get Microsoft and Meta, Amazon and Apple are only going to confirm that?
Yes, well, look at Google's earnings. So their cloud revenue is up 32%. Their margins went from 13 to 20%. Like, how do you walk away from something like that? We're facing one of the most transformative technologies right now. And what I find is investors are underweight this sector.
Well, I'll see you on the earnings, and I'll raise you on the stock reaction on the other side. The one did not correlate with the other, did it?
Agreed, but you're talking to someone that's owned these stocks for 14, 12, and 11 years. So one quarter doesn't make my thesis. I'm looking longer term. This is how wealth is built. Own these great companies, participate in this transformative technology, and you're going to see continued growth of these equities over time.
No care about valuation or the top-heavy nature of valuation in the market at all?
Yes, the market is expensive. These stocks are rich, but I still want to own them because they're growing. And you're not going to. You have a choice here. You can go buy cheap stocks that haven't moved or that are beaten down, or stay with winners. And I prefer to stay with the stocks that have worked.
What if I want a piece of credit? Munis? You still like munis?
Yeah, munis have been fabulous. So. When I have a client and they're wealthy and they want to have safe portion of their portfolio, they're not going to buy muni, they're not going to buy corporates or treasuries because they're fully taxed. Mm-hmm. Now we can get munis 4.5%, and if I have a target rate of return for a client of 7%, I'm the 70% of that return by owning a safe muni right now. So we still own munis. We're asset reallocating. When we have massive gains in the stock market, we reallocate back to the safe side. So it's a great opportunity to do that for wealthy investors.